Hello everybody and welcome to the midweek market update from Smack the Markets for the 6th of May. Now, so far this week, the markets have been fairly quiet, not a great deal of volatility being created until sort of late last night and early this morning. We're starting to see things liven up a little bit. Now, going into the second half of the week, we expect things to liven up even more. We've got some key news events coming from the US later today, the Europe tomorrow, and of course on Friday we have the key non-farm payroll numbers, which are not expected to be particularly pretty. So let's take a look at how the markets fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we come and take a look at the S&Ps first of all, on Monday we were looking at the market here, where the market had gapped lower underneath a key level and also created quite a gap in the markets and into a new trading window to the short side. Now, since then, the market struggled to move higher and it's managed to break through this level again at 28,000 and closed the weekend gap. It's a similar story with all of the US indices, in actual fact, the Dow as well. So the market's now progressed on, and we've seen continued advancement here up to around the point where the market is at the moment. So that's just underneath this 29,000 price point, where there is also some key support and resistance in this market. So we're keeping an eye here, a very close eye on the short side on this market, and we do expect the indices here to have another run to the short side at some point in time. Now, if we just take a look at where we are, I think we're coming up to a key decision point. We certainly don't want to fight a market that is moving higher. And indeed, when we trade these, we're very much intraday trading opportunities, really just trading the intraday moves in the cash market session rather than trying to swing trade these in the overnight pricing. Now, at the moment, if we take a look at where the market is, if price can get above this area, well, then we're clearly into new strength, and we could be starting to see a test up here towards the highs, possibly even getting up towards that sort of 3,000 in the near term. If, however, we see failure here and the market can't get through these levels, well then, we expect the market to retest the 28 level, back down to retesting the 27 sort of 40 area, and these trading windows to the short side. Now, if that happens and we see weakness here, think about the structure of the market that we'll be looking at. We'll be looking at a potential head and shoulders here across most of these time frames. So we're keeping a close eye on this at the moment, and keeping an eye on this potential sort of decision point area here. And it's very, very similar on not just the S&Ps, but also on the Dow and the NASDAQ as well. So if we come and take a look now at the commodity that we discussed on Monday, which was silver, and just remind ourselves what we were looking for. So what we were looking at here was silver below the 1477 level here on the weekly chart. Now, the market has bounced off this level at the moment, and we have got a small bounce, if you can see this on the daily time frame. We didn't manage to get a break underneath here. We're still favoring opportunities to the short side here because the trends are at the moment to the negative side. There is some imbalance between gold and silver at the moment, and they are particularly sort of challenging sort of markets, although the silver market is more clearer and more structured in our opinion than gold at the moment. So at the moment here, we've still got lower highs forming here on the daily. If the market takes these out and changes the structure here and we start to get higher highs, well then our bias will change. But at the moment, weakness down here, down past the 1477, we'd certainly be looking at new opportunities to the short side. But this one, not a great deal happening at this moment in time. Now, if we come and take a look at the Forex market that we discussed also, which was the Kiwi against the yen, again, this market, we were looking for weakness underneath the 64 level. At the moment, the market hasn't broken underneath the 64 level just yet. So we've still got weakness there. The market's still sort of coming down, but with the again, we've had very little volatility in the first couple of days of this week. If things progress and we get underneath 64, then we are looking for positions and opportunities to the short side here. So other markets that we're also looking at in the currency markets at the moment, and maybe closer for potential opportunities, are things like the Singapore against the yen. And if we take a look at this maybe on the weekly chart, you can see that the coronavirus sort of crash here has sort of pushed this market lower. We've had the retracement, and now we're starting to see weakness coming back into the market again. So taking a look at this on the daily time frame, you can see that we've got a bit of a level through here. This 75 level is certainly sort of proving to be a bit of key support and resistance. Underneath here does open up for potential moves to the short side, and this is what we're sort of looking for. If we come to the 4-hour time frame, again, if I just sort of zoom out of this, you can see the structure of the market. We've had a sideways price action and support found around the sort of just above that 75 area at the moment. The market's just sort of taken out that 75 sort of price point at the moment, just sort of sitting on top of it. Below that, we've got another bit of support around 74.70, and below that, possibly down here to that 74 level here. So again, we're looking for these trading windows to the short side here on this market, and particularly now that we've broken through these levels, and the overall sort of structure of the market is to the short side with these lower highs. So there's a few markets there that we're keeping a close eye on going into the second half of the week in the trading room. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.